Good morning, boys. We are back on the charts, and here we go. This is nice. Finally, price is trending away from this mess we had the last few months. And, we can see now price trending a little bit. And this is very, very nice. So let's go on the daily chart. So all started around Tuesday since we rejected this inversion fair value gap on the daily. And we started moving away from all of this. You could have this one like here too, because there's a little volume imbalance. And technically on all the charts you potentially have this one too, but it doesn't really matter. The thing is we reject away from this level, which is a very good thing. We had a layered liquidity below us with 2 monthly lows, which I mentioned on my last outlook. That I wanted to see them getting rated. Now we have this CB. It's not confirmed yet, meaning that the candle did not close yet today. But if we could potentially make a CB like this, then I'm looking to go over the volume imbalance here, and then this week on the new week opening up, sorry, on the weekly, we have a large wick. So I want to see if price can go through it or if it struggles. So this is pretty much what I'm looking for on the daily. So if we check ES, it's been slower. We had an SMT on all-time high here. Was not really a big thing, but I really liked how we finally closed away from the new week opening up. Thing that Dow didn't. We have equal lows on Dow, just below these two here. But we have a major SMT. Nasdaq is really weak lately. So, shorts on Nasdaq were really, really, really prime. So also yesterday I talked about how I wanted to see shorts not going over the new week opening up. So from this area here, and we had a nice 6 a.m. 4-hour candle closure, and then a 4-hour silver bullet from 10 to 2 p.m., which had a lot of opportunities to continue to January low and December low. Then a little reaccumulation here, and again we pushed back lower today. So let's go over the hourly chart. So yesterday, as we can see, price did come back around the open inside this fair value gap that I mentioned on my outlook. And already at 7 a.m. we were going away from it. Then we had a little pullback inside this week. So if you want to measure this one, you can. And see how price taps that and goes lower. That's a really nice signature of the flow. We also had this inversion here. But let's go deeper on the 15. This is a trade recap too. So the first thing I came to mind yesterday was this big SMT on these highs, making me think about Nasdaq being really weak, because it couldn't even touch the new week opening gap, right? While ES was touching it and Dow was rejecting it. Okay, so Dow was really strong yesterday, so no optimal asset to short. ES was a little bit stronger, also not ideal to short, but Nasdaq, which did a nice run lower, was great because of these signatures. So when it comes to the 9:30 open, as we can see here in this candle at 9:15 and 9:30, price here drops, while ES does what? Pumps up and takes a swing high out. So this is a major SMT, really important. What does Dow do? Well, Dow push all the way up to these London highs. Okay, couldn't take our previous day high, but did take all the London session high. So we have a major SMT. So if you're looking for shorts and in Nasdaq you see the other ones going up, it means that the Nasdaq is really, really, really weak. So let's go over the 1 minute, and now I'm gonna show you my execution. Okay, so give me a moment. So now we can see how I had the midnight level, the 8:30 level, which were good opportunities to find short-term discount. So if I pull out the 830 level, it would have been here. As you can see, price never reached it, and never reached the midnight opening either. But what do we have here? 930 push lower, make up first presentation, and a big candle here. Price does what? Goes up, touch the regular trending hour open, and takes out this little swing high from the open. Here we have all the SMTs we were talking about before. And now we have the opportunity. Why the opportunity? Because now you could potentially go short of there were so many opportunities here on the 30 seconds. I didn't really like to trade this range here because it was really choppy. Like price could have just wicked up a little bit. So I don't think this was really nice to go short on. But when price did this close, I was already looking for, get involved in shorts, because now we have the respect of the first presentation and we have price telling us that it really wants to go. Okay, so I did miss out this opportunity. I waited for 10 a.m., which, give us another opening. So we have 10 a.m. open, price goes up a little bit, and does what? We have our order block here and the first presentation. So usually 10 a.m. tends to come back for the first presentation. I didn't want to see a complete reversal, so I was looking for signature of weakness. So here we have a first presentation, 10 a.m., which, it's a fair value gap that was respected. So when I saw that, I was okay, I'm a wait for a little bit more. Then what I saw was this amazing stop hand on the 5-minute, which ended up rejecting the first presentation and closing back inside the range, giving us a little inversion over there. See this fair value gap failing? This was a nice signature of, shifting order flow. And then here on the 1 minute, we had nice equal lows resting just below the fair value gap. So this was really good. Then we had, of course, the other targets and the full targets right below them. See how price comes back for the first presentation and rejects way again. Very nice signature. We had another opportunity. If you really like to trade the inversion fair value gap, then the 50% must be, not close with the body. And so this was a nice signature of order flow again. So many opportunities here to continue this run down, which ended up giving a lot of points, around 400. So my entry was here around 125 points. So what I basically did here, everything was confirmed. I could have entered here, I could have entered here, I could have entered here. But what I did was I dropped on the 15 seconds. Now we are on the 30 seconds, I know. But now look, this price action on the 30. Do you see anything good here? I do. This is a market maker style model. Perfect. Then I went on the 15 seconds for my execution. So let's see. So my execution was actually on the 15 seconds. Oh, and there is a reel on my chart, on my YouTube channel where I talk about this setup, and I actually put the execution live. So what I was seeing was price giving us nice order flow away from the first presentation, and then I saw this order block making a propulsion block, and then price come back on the 1 minute fair value gap inversion. Now I don't want to see price closing away from it, so I don't want to see price going up. So what I was doing here, I was just looking for confirmation to go down. So when I saw price going up and rejecting the 50% of this guy here, that's when I entered. So my stop was kind of like above the 50% of the first presentation, which is a safe spot, because imagine if you are wrong, you don't want to see price going up away from here. So I'm gonna give a little bit of space to my stop loss to, for the trade to play out. It doesn't really mean that my stop loss is really here or here. It just means that I'm waiting for price to react. If it doesn't, then I'm gonna close the trade manually, losing less than when I was calculating, okay? So this is the execution, this is the immediate response, and this was the pullback, which on the 15 seconds you can really understand where price is pulling back. But that's why I then went for the 30 seconds after my confirmation entry on the 15, and then I saw this amazing fair value gap, which was just a continuation. So now I can be already break even. Why? Because when I entered in this trade and I saw the immediate rejection and price creating a 30 seconds fair value gap, now my trade is risk free in what? 30 seconds? So yeah, here is my entry. Price goes down, creates a fair value gap. I don't want to see price going past this. The weak scan, so my stop was just trade here to break even, but I didn't want to see price closing this inversion down. So then immediate rush down, and now I'm trailing my stop once again. So when I see this, my stop loss goes just above here, then price continues, makes another fair value gap, my stop goes where? Just above this fair value gap. Then price breaks again, then my stop goes above the order block, and then it gets taken out, probably taken out here, just here. But you can see the execution anyways. So this was the trade setup. This was the TP. Of course, I was targeting lower prices, but I didn't want to suffer the pullback. So I was fine, finding like another opportunity. But after this nice entry was done. So this was pretty much what I was seeing, what I played out yesterday, which you had the outlook and the bias for the execution. So if you like that, you can of course go and check it. But yeah, that's pretty much the logic I used. So hope you like the recap. So let's talk about today super quickly. Again, I'm still bearish. I'm still looking for price to tap this volume imbalance on the daily. Right now, we just went through these monthly lows, which are these two lines here, and price is in a big expansion leg over there. So I'm gonna be honest with you, I don't really like this. We did expand a lot. We are trading from a breakout now, so price could either pull back or continue lower, which makes things a little bit low probability. So I'm not a huge fan of this PA. And yeah, yesterday I played a lot with this new day opening up with my personal account. So I was using this level as guideline to find a setup. I was looking for longs here. I run it up here. A rejection block put me out, stop loss, well, stop in profit because I entered here. So stop in profit here. And then price ran down, gave another opportunity to go down, give it a ghost, and come back up. Come back up where? New day opening up, rejects again, give another opportunity, 50%, get it sensitive, and run away. So this was a very nice level to trade this morning, and on Asia session too. The fact that we are leaving it and we left equal highs above it, it makes me think that we maybe are forming some sort of market maker buy model, because price at some point must retrace a little bit, because today is Thursday, we did expand a lot, so probably Friday or today we're gonna just make a consolidation or a pullback. So I'm not really excited for these 2 days that are coming between today and Friday. Also, we moved the NFP out so the calendar is kind of weird. Yeah, pretty much a lot of confirmations that I don't really like. But this doesn't mean that I won't trade. I will still be looking for some sort of setups, but I'm not really excited about what could happen today. That's pretty much it. I've done my work for the week. I don't really need to keep pushing, right? So Now I'm gonna do some drills. I'm gonna see if price can play out maybe this sell. We had a nice top run. We still have liquidity underneath us. So I would like to see if price maybe can continue running our way from these levels. So see, like in this case, if you take this short, now you could be already break even on this, because you don't want to see price coming back to your fair value gap entry. And we already, as I mentioned before, we want to see the volume imbalance getting filled. You had a nice stop hand on the 5-minute, coming back to a fair value gap, which offered short-term discount. And this is good, because price couldn't even tap the 50% of it. So, you know, if you start seeing rejection away from this one, it's nice. It's not a bad trade, but you need to be comfortable losing, because, you know, these setups appear all the time, and, you know, you're gonna lose some, but the risk reward is what's gonna save you. So risk management, following your rules, and, you know, also, you know, waiting for the right setups. And so this is probably gonna take out break even now. There we go. So, you know, also waiting for the right days is so important, because if you don't compare a model, a bias with a narrative, you can't really find good setups. Like, it's really hard. So if you trade in a day like this, where all the objectives are reached, which are the monthly lows, you know, the daily levels, now you're losing interest. Like, yeah, okay, price could either go up or down, but now it's 50-50. Like yesterday we had a 80-20, the price was bearish. So that was a very nice day to find shorts. Today is not that good. Okay, that's what I want to say. So take care out there. Don't lose your mind over a Tuesday. And please, if you made profit this week, don't waste it the last 2 days, because now we are entering in low probability scenarios. Even though that price is trending right now on the 4-hour, that's a good thing, but wait for the right moment to go short again. Okay, and, you know, think about price, you know, just sweeping the monthly lows, making an SMT. That could be a sign of a possible short-term failure and a short-term bullishness. Not confirmed yet, but, you know, be content with what you made on the first 3 days of the week if you made money. If not, then try to find something, but wait for the right opportunity. Don't stress so much on, you know, being right. Find a super good setup. We are entering on February. It's just the first week. We have all the month above in front of us. It's gonna be good, and price action is keep going to, you know, find better opportunities, start trending again. So yeah. So I hope you enjoyed the video. If you did it and you watched until here, congrats, and, you know, leave a like and subscribe. Cheers.